Good morning, traders and investors. What do large-scale data centers, NVIDIA GPUs, and Bitcoin have in common? You guessed it, IREN Limited. And that's a company or a stock that we're going to talk about today on this episode of Wealth Down, where we build and protect wealth. So let's get started with IREN Limited, formerly known as a Bitcoin miner. It's actually no longer a crypto story. It's arguably one of the most exciting and riskiest also. So be careful with today's video. AI cloud infrastructure players. Now, a massive 9.7 billion multi-year deal with Microsoft and strong execution has sent the stock up. Take a look here. Well, almost 400%, but 6 months. Oh, yeah, there we go. Year to date, 483%, and year to year, 440%. That's just a massive jump for one little stock that was previously $5. Now we're going to analyze in this video if this is a buy, sell, or even a hold for the long time for IREN Limited. So let's get started. And first we're going to take a look at the fundamentals, of course, which are not many. So this is mostly going to be a story-driven fundamental story. First things first, the pivot. IREN utilizes its vertically integrated power infrastructure, including owning and operating data centers and renewable-rich regions to host large-scale GPU clusters. So don't forget, priorly used as Bitcoin miners. Can remember the GPU crisis back when Bitcoin was jumping around there. Same thing here. This transition offers a potentially high margin, more stable revenue stream than pure Bitcoin mining. Remember, Bitcoin mining was kind of restricted by energy. We're going back to the energy story. What a surprise. So just for further information, I'm going to do a massive deep dive into the energy story, which I think is the next leg for the AI story here. So just keep subscribing there. You're going to see a pretty brilliant video on that one. Now, the AI backlog is as following. The single most important factor is the 9.7 billion 5-year cloud service agreement with Microsoft. And that is for delivering NVIDIA GB300 GPUs. This massive contracted revenue stream gives IREN a level of over visibility most AI startup would just dream of. So what are the unit economics? Because do have some data here, but that's not telling the entire story. Also, they're expected for Q1 2026 to grow massively. They're expected to have a revenue of 240 million, net income of 384 million, and that's a net margin of 160%. That is also why the stock is up as much as it is. So let's just think about a couple of key financial factors. In an overview, we have here free float shares 254 million and closely held shares 60. Price to earnings ratio 31 and price to sales ratio 32. Now, revenue accelerated in Q1 of 2026, reported November 2025. Total revenue increased 335% year to year to a record of over 240 million. AI cloud services revenue is accelerating, growing from small base to a significant driver. So what is the valuation actually, and what are the execution risks here? Just by a slight comparison, IREN Limited, the current of 131 PE, is normalized. A forward-looking 5-year average, or actually not forward-looking, but backwards-looking 5-year average of negative 2.76. You can compare it to Bitmine, which has currently a minus 35, and looking backwards 5 years, an average of 696. Applied Digital, currently minus 44.37, 5-year average minus 124. So we can see that's kind of the leader of the group. Now, a traditional discounted cash flow model often value IREN Energy's intrinsic value much lower. Some analysts suggest $25 per share, which is currently now at $69 per share as we're recording this video. But this is highlighting a significant gap between the current stock price and traditional value. Now, this stock price is currently a successful bet of the multi-billion-dollar AI contracts and the company becoming a dominant neo-cloud provider. So remember what the story is when you want to buy this stock at this current price. And the execution risk, or maybe the single biggest risk, is speed and cost of the build-out. Any delays in the builder's campus expansion, issues with security and necessary power, which will be necessary power will be a major problem, or even difficulties in sourcing the massive number of GPUs could cause the market to reassess the stock. So, fundamental conclusion, which we don't have any that many fundamentals on the stock currently or on the company, the core business is paradigm shift growth story with an immense revenue backlog. But the stock is significantly overvalued based on the current financials. Okay, now let's do a technical analysis here on our charts. We have the daily charts here with 20-day moving average, 50-day, 100-day, and the 200-day. We can see clearly that it is above its 50. Just pierced yesterday the 20-day moving average. They already had their earnings. It was okay, they missed, but the company is not currently expecting to blow out earnings. Now, RSI is currently at 50, so right in the middle. It could go up from here, it could go down from here. More likely it's going to go further down due to the fact that we already have triggered a MACD sell signal. Now, if you take a look on the weekly chart, we have a massive distance between the current price and the 20-day moving average, which is well below at 35. Currently 60 something, actually closed at 60 yesterday, and a down movement to the 35, which is kind of expected. If you take a look here at the RSI on the weekly, it is massively oversold at 83, and the MACD is trying to trigger here on the weeklies, that is, a sell signal. So the stock will probably come down significantly more before it's going to go up. So let's just see what the upcoming weeks hold for this stock. And if you want just my opinion, and full disclosure, I do hold a little bit of IREN energy. But if I go back here to the dailies, also in the Ichimoku cloud is outside the cloud, so everything is still okay. It could still go down to the 50s, go back again, or even from here have a little bounce and then correct. It's not even looking like a double top here, it's still looking like a pretty much bullish run from here on, but it's kind of want to correct. Kind of wants to come back to the moving averages. That's why the moving averages are there. That's kind of like magnets for the stock. So let's just take a small conclusion here, because you have a lot of support down here, even to the 21s. This stock, if it comes back to the $21 a share, it's a definitely buy for me, that is. But it's still a high risk stock. It's still maybe not a good idea to get in here for a long term. Maybe wait for some better prices to be revealed. With time, there will be. I believe that we also will have a small pullback in the stock market in the upcoming weeks or even months, somewhere there. I'm not going to predict like Goldman Sachs did in the upcoming 6 to 12 months. Well, of course, you're going to have a pullback in the upcoming 6 to 12 months. That's always happening. But keep in mind, if you want to add to IREN energy here on your own risk, my recommendation, wait for a good enough pullback, find some support, see a bounce up, retest it, confirm it, and then start adding IREN energy. Okay, that's it for me for now. I'm Robert Menhart. This was Wealth Down, where we'll build and protect wealth. Don't forget to like and subscribe. Catch you in the next one. Bye-bye.